um, we have a grain producer, so a farmer, and we have a company that produces bread, right? So a bakery, right? The the farmer produces wheat, and the bakery uses wheat to bake bread, right? Let's say the farmer expects that the prices of wheat are going to decrease, right? And the baker, he expects that the prices of wheat are going to increase, right? So they have a different view in the market, right? One thinks it's going to decrease, the other one thinks it's going to increase. They can use a futures contract to then mitigate the risk on both sides for them, right? COT is a great tool to see the pivot divergence between commercials and non-commercials. Yeah, it's a great tool for that. Yeah, I use divergence in the COT as well, and that's something we're going to look at later in the stream because it's a very good tool to use. Divergence in the COT. Second group, non-commercials. These are usually large fund traders, and they have no business activity related to the asset, right? They aren't the grain sellers, they aren't oil sellers, they're just in the market to make money, right? Just like you and I are. We're just not big enough yet to be a non-commercial, right? We don't trade uh multiple thousand contract positions yet. Maybe we will sometime, but someday, but for now we're not non-commercials, right? And then we have the non-reportable, and that's where every one of us falls into. Small speculators, investors for traders who hold positions in the futures markets that are below the reporting level of the CFTC, right? So how are they being tracked? Um, it's just random, right? The CFTC uh, gets the data from brokerages, for example, um, and it's not that every person that's under the category of non-reportable will get checked, right? It's a sample size, right? So when we trade, we have the commercials on one side and they supply to the other side, right? Usually commercials are sell side. We're like a mosquito trying to kill a bull. Yes, that's a bit how it is indeed. Yeah. Um, so the commercials are usually on the sell side, right? They sell the product to the market, and non-commercials, non-reportables will buy it, but at the same time, they will buy as well as hedges, and then you will see that they will sell, or non-reportables will sell. Um, Now that you say it, Londres, right? A fun exercise to do to get a proper understanding of the amount of money that goes into the market is to write down 100,000 on a notepad, right? On your PC, write 100,000 and then copy it 10 times, right? And you'll have a million, right? And then paste it 10 times, you'll have 10 million. And then paste it all the way until you have 1 billion, right? So by the end, when you've pasted enough, there should be 1 billion, right? In 100,000 increments, right? Try to erase one or two, or maybe five or six of the 100K numbers, right? As if you're buying a house, and then try to scroll back, through the document and go find where the gap is. I can guarantee you can't even see the gap because it's so much money, and then you'll properly understand how much money goes on or gets transferred through these markets, right? Because essentially, it's crazy to see it like that. It's a fun exercise to do. So as I said, they sell to us, or we sell to them, right? But usually commercials are on the other side of the trade, or yeah, market makers. So how do we translate this, and how do we look at this with market maker models, right? When we have a market maker model, we have buy side accumulation on the left side of the curve, right, in a sell program, and we have buy side distribution in the buy program on the right side of the curve, right? And let's say the overall trend is to go higher, right? We have a uptrend in the market, right? Every time the market goes down, it's called the hedging program, right? Same thing on the other side. When the market goes down, every time they go up, it's the hedging program active, right? Because overall they are selling, but in the meantime they are buying, right? That's why we only can follow price, we can't create it. Yeah, that's true. That's true. So, fortunately for us, so just to start, the COT report gets released in a format that's just numbers, right? And it's just the numbers of the week. So to properly visualize it, luckily for us, our friend 2degrees has created a tool, the commitment of traders tool, as an indicator that you can plot on the chart and to make it easy for us, right? To understand what's happening on the charts. How does it look like? It will look something like this on your chart, right? Where we have a zero line or a net zero line. And this indicates that their net positions at this line are neither long nor short, right? They're completely neutral. Does COT apply to indices? Yes, it's um, applied to all futures contracts, right? And options. It's also for options as well, right? Yeah, perfect. IST commitment of traders. That's it, right? And every time they go below the net zero line, they are net short on their positions, right? Every time they go above, they are net long on their positions, right? And how these guys look at it is a little bit different because they don't, when we execute trades, right? And I think a lot of us here trade futures, right? Type a one in the chat if you trade futures. Let me know. Okay, so lots of futures traders, right? You'll probably recognize what happens if you open a trade, right? Let's say you open one contract, right? It's a buy. It's a buy contract, right? You're buying a contract. And let's say after 5 minutes, you sell one contract, right? What happens? You're back at neutral, right? You're back at zero. That's how it works for us. But these guys, they view it a little bit differently, right? They open long positions and short positions, right? And it's also an aggregate of like all total commercials, right? So commercials can be long and short at the same time. We see both numbers of longs opened and shorts opened, shorts closed, longs closed. So let's see, how would this then translate to the charts with the market maker models in mind, right? Once the market reaches a point of fair value, what we can see here, we'll see on the COT report that it's actually going down, right? While large fund traders are entering long on the move up, commercials are on the other side of the trade as hedgers, right? Because they are selling. If large fund traders want to buy, there's always a need for someone to sell, right? And who is the person that's going to sell? Well, in this case, the person is the commercials, right? So they need the commercials to sell the position to them. Let me know if anyone needs me to elaborate on this, or if you don't understand it, or if you have questions. By the way, feel free to put them in the chat at any time. Please explain again, for sure. So let's say you go to a store, right? Um, and you want to buy something, right? There needs to be stock, or there needs someone to open the store, right, for you to be able to buy something, right? So for every buyer, there must be a seller, right? Otherwise, there's no market. In this case, the commercials use the market to hedge against their business risk, right? So what they will do is they'll sell using the market, for example, and large fund traders who might be bullish on the market, they want to buy that, right? So they buy that position from the commercials who is selling it at the same time, right? Other way around, when large fund traders are shorting, right? When the market's going down, they are buying, right? The commercials to hedge the risk of their business. So they're always on the other side of the trade. And what you'll see is that like 99% of the time, because it's otherwise not possible, um, that commercials and non-commercials are complete inverse of each other, right? They'll be on the complete other side of the market, right? How would we able to see this on the chart? Well, a chart example would be the euro dollar daily chart, for example. What we can see is that the market's going up while the COT is going down, right? So once the market's going up, they are selling, and long term or large traders, large fund traders are buying this move up, right? we see a reversal, and that's when the other side of the curve happens. You see, the market moves down, but they start to buy up, right? Commercials start to buy. So I hope this makes it a bit easier to follow what we're looking at, right? They'll always be on the other side of the market, so this is how you can view it. It also kind of looks like a market maker model, right? One side of the curve and the other side of the curve. At the end of the day, it's all market maker models, right? Everything, always. It's all the same, all market maker models. Doesn't matter where you look at, where you're looking, doesn't matter. Right. Same scenario for the buy side, right? In buy programs, market will reach a point of fair value where commercials want to do their business, and they'll when the market reverses, um, we'll see on the COT report the exact other thing, right? That's what we saw here, or well, what we'll see in the next slide, right? It's the gold chart, a weekly chart in 2022. It's a perfect example of how the market's going up, right? Or the market's going down while commercials are starting to buy, right? So actually, they're just buying at lower prices constantly, right? And in the other scenario, right here, you see that they are going to sell, right? And they're selling into higher prices. So, um, I'm not sure if ICT you have to type in this ICT commitment. I'm gonna type it out for you. This one. And the 1 by 2 degrees because it's the best one. Has any one of you ever looked at the COT reports? Maybe through the indicator? Nope, not yet. Anyone ever seen it? Yeah, you did a Larry Williams seminar. That's great. You looked at the actual report once or twice. Has anyone ever seen or noticed, by the way, um, that often commercials or large fund trade commercials that they are always net short, that they are always below the zero line, right? Because on a lot of times we'll see that commercials they like here you see they are minus 272.52k, right, on the gold chart, and this is a weekly chart, right? So we can't even see the zero line here, right? You can if I uh, zoom in a little bit, right, we can see minus 40, minus 80, minus 120. They're always net short, right? Wouldn't that be weird that they're always selling, always short, right, on the market? I get this question, why are commercials always short on the market, as if they're like perma bears or something, right? Um, and the thing is, they're not perma bears, but they have a bit different use case for the market than we do, right? So they're always short because they are selling into the market because it's just their business, right? So if they have a lot of stock on, let's say, oil, and they are selling oil like crazy, um, it just means they're earning money on that oil, right? But at the same time, on the COT, it will tell us that they are short on the oil, right? They're always net short. So why are they always net short, right? For example, we have the crude oil futures chart, and since 2008, they've been short only, right? And it would be weird if they're only short, right? Because they would lose money if they're only trying to short, right? So, as I said, it's just uh, a, a way of doing business for them, right? So if they're always net short, right, sometimes it might make it a little bit hard for us to follow what they're doing, right? So what is a tool or a way that we can go against that and make it easier for us to understand what they're doing, right? First tool that you're going to use, and that's why I said use ICT commitment of traders from 2 degrees, is that he has the built-in programs, 6 months, 12 months, 2 years, 3 years, whatever it is, right? Indicator only works on a daily time frame, yes, because you don't really need it below that anyway. But the first thing we're going to do is we're gonna use the short-term buy and sell programs, right? And what it will do is it will plot this for you. Let me scroll towards it. This, right? It will implement the 6-month time frame and a line, right? And it will use the lowest point and the highest point in that 6-month mark and divide it by 2, right? And then you'll get a midpoint of that. And then you can see a short-term buy and sell program inside of this, right? That's tool number 1 that we can use. Right? Let me know if there are any questions about this. It's sort of like a premium and discount, but you gotta see it more like a short-term hedging and short-term buying, short-term selling. It's more like that, right? Um, Too fast, tell again. Okay, so we have a vertical line that delineates a 6-month mark in this case, right? But you can customize it to 2 years or 3 years or whatever you want to, right? Then it will mark the lowest point and the highest point within that 6-month mark, right? And it will tell you the midpoint of that, right? Everything below it is a short-term sell program. Everything above it is short-term buying, right? Sort of like a premium and discount. Yeah, if that helps you understand it better, then that's fine, right? Because it's kind of what it is. Um, then there's a second thing, right, that we can use. And I saw that someone took a seminar of Larry Williams. It was Ed P. Maybe you know this already. But there's another tool Larry Williams likes to use, and it's a great tool as well. And it's a COT index, right? And the COT index is like a calculation that he uses that picks the current week's value of the COT minus the lowest value of the last 3 years, and you divide it by the highest high of the last 3 years minus the lowest low of the last 3 years, right? And then times 100. And what you'll get is a percentage, right? And the COT index kind of tells us the buying and selling activity relative to the past 3 years, right? Are they buying and selling a lot compared to the past 3 years? It's kind of an oscillator, yes, because if we would just view it like this, it would kind of be like, ah, okay, they're not really selling or buying that much. Let's say we're looking at this, right, in the 2006 until 2010 area, right? It looks like they're not doing that much, right? Um, but it could be that they're actually doing a lot compared to the previous 3 years, right? So that's what we use the COT index for. That's what we use this for. Um, so, and then we also have, because we can use this data, we can use it we can use it on the commercials, we can use it on the non-commercials, and we can use it on the non-reportables, right? So you can see how we can apply it to 3 different groups. So we're also able to get 3 different type of information out of it, right? We can gather the information. Okay, what are the commercials doing? Are they buying or selling a lot relatively to the last 3 years? What are the non-commercials doing, and what's the public doing, right? Um, Rules of the public index. Um, hey man, Project Mayhem, how are you doing? No worries. We are in that long, I think. But anyway, the public index, right? Larry Williams has a few rules for the public index. One of them is look to sell short when the public is at extremely high levels of bullishness, right? So when the public is very bullish, that's when you're going to sell. Look to buy long when the public index is at extremely low levels of bullishness, right? So you're going to buy when they are very bearish. So it's a very contrarian rule, right? So the second rule is kind of we learn to do the exact opposite of public traders as a group, right? When they are sellers, we are buyers. When they have been buyers, we are sellers, right? But at the end of the day, if you want to get a good long-term view of, for example, commodities or indices or whatever, it's best to do so from the hedger's perspective, right? Or non-commercials, right? Why? Well, the hedgers, they are the most important, right? They have the most access to cash markets, which gives them a large advantage. They are buying and selling in cash markets every day, and they have a better sense of the actual market prices, right? Hedgers have far superior information on commodities than we do, right? So they are the actual smart money point of view, right? And then we have the large traders. And what we could see in the charts, right, is that large fund traders are on the other side of the market, right? So if they are right here, they are selling, 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 selling. They are buying, 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 right? So it means that when they are short in this move right here, and suddenly the market reverses, um, lots of the time I see that people think that large fund traders are always incorrect, right? Or if they lose a lot of money because they're always on the wrong side of the market, because smart money always wins, right? And oh yeah, you know, non-commercials are on the right side at all times, but that's not really the way how large fund traders work, right? And how they operate. Um, so there's a thing that we say, and it's large traders are correcting trends. They follow long-term trends, right? And they all follow each other. And for example, on the COT index, that's why it might show extreme buying above net zero at market tops, right? So most likely, if we would take this chart and we would add the COT index, right, it would show that there's extreme levels of selling right here, right? And then we would think, okay, why are they going short all of a sudden right here, right at the bottom of the market, and the market reverses, right? But the thing is, it's not completely accurate, right? Because large fund traders, they step into long-term trends over time, right? And they all follow each other. So early bird gets the worm, right? So large fund traders one steps in early, fund two steps in a little bit later, three fund three steps in pretty late, and fund four is just too late, right? And then the market reverses, but because the positions on the COT report are stacked on top of each other, right? For all the firms at the same time, it shows an extreme amount of buying by the time we are at the end of the trend, right? So that's why it works that we can use these levels of extreme buying and extreme selling as signals for reversals, right? So follow the commercials, fade the non-commercials and non-reportables, right? Anyone got any questions about the COT part? Because that's done for now. We're going to talk about open interest. Let me know if there's any questions still left about the COT. Love that quote. Yeah, I love it too. It's from Larry Williams. Thanks, Josh. How are you? Good to see you here. I thought maybe today we're gonna be the listening quietly. We're gonna do a little bit different than normal, right? First presentation, and then we're gonna look at some charts to apply this stuff, actually, right? Why don't we follow the commercials? Well, um, because commercials usually are right in long-term trends, right? But we want to be on the other side of the market. We want to have the superior knowledge, right? If we are following the non-commercials, um, why don't we follow? Oh, no, other way around. We follow the commercials. We fade the non-commercials, right? So we want to be on the side of the commercials, and we want to fade the non-commercials. Maybe you could show the example of GBP and what happened. Also, show the cut report from the weekend. Yeah, we're gonna do all that stuff after the presentation for sure, for sure. I got that. I got it all set up, man. I got it all set up. Don't worry about it. Um, so we fade big traders, yes, because they are trend traders that step in this way. We are able to see when we can expect reversals coming in by looking at what they're doing, combined with the uh, looking at the hedgers, right? So open interest, right? Open interest. What's open interest? It's the amount of um, open contracts at the end of the day, right? And then what's the difference between volume and open interest? Because they're both contracts that are being traded, right? Does anyone know the difference? I see several people are typing already. Between open interest and between volume. Volume. The difference between open interest and volume. No, don't check. You gotta. It has to come out of your head. You have to know it. You can't check on Google. That's cheating. Oh, are options? No. Open interest is the amount of contracts at the end of the day. Um, it's like the strength of the trend. Yeah, you can measure that with it for sure. Volume is money wise? No, not really. Someone's getting closer. Someone's getting closer. So yeah, exactly. So kind of you can compare it to a swimming pool, right? Yeah, exactly, Pippi. Welcome, by the way. So you kind of feel like a swimming pool, right? Throughout the day, people will come and go and visit the swimming pool all day long, right? They'll swim for an hour and then they'll go, right? But at the end of the day, when the swimming pool is about to close, who's still in the pool? That's the difference, right? So volume is the amount of contracts that are traded throughout the day and they're not being held until the day closed, right? Or when the day ends. Open interest is all the open contracts, right? So it's really in the name, open interest. It's all the interest in the market that's still open, right? Volume is closed already. They close the contracts, they close the trades, right? So a futures contract always consists out of one buyer, one seller, right? That's what we need. We need both parties for a single trade to happen, right? So that's why open interest is always on both sides of the markets, right? Then we have tool number 2 that we're going to use for this, which is seasonal open interest, also by 2degrees. And I suspect Elgo is fetching the link to to the indicator right now as well, like he did with the other one. Um, how does that look on the charts? Something like this. Yeah, I think most of us are indices traders, right? So I on purposely I drew a chart that represents the indices futures, right? For commodities, it's a bit different. You sell options too. Great, man. Great way to earn an extra money on your stocks that you have, man. Seasonal open interest. There it is. Perfect. So seasonal open interest. It's indeed cumulative, right? So it stacks on top of each other. The more interest there is in the market, the higher this line will go, right? And when the contract ends, in our case, when we have quarterly contracts, open interest will drop, right? Because the amount of contracts they get closed, right? But at the same time, it will never drop to zero, right? There will always be a substantial amount of contracts that get rolled over to the new contract, right? So they'll get picked up right immediately, and that's why it will never go to zero, right? And then it will start to build up again, right? Until the end of the contract, and it will drop again, right? And our friend Larry Williams, he always says when there's little speculative interest in the market, it's a better buy than the other way around, right? How do we interpret this? See it like this. When there's not a lot of people interested in the market yet, not a lot of retail interest in the market, we're better off buying, right, than selling. When there's a lot of retail people interested in the market, it means the most likely top will be in somewhere, and we can look for sells, right? I know that there's someone said you can use it to spot the trend, right? To spot the strength of a trend. It's true, and I know that a lot of people teach it that way. But there's a catch, right? It's not completely straightforward. Yes, normally a rise in open interest coupled with bullish institutional order flow confirms strength, right? A rise in open interest coupled with bearish institutional order flow also confirms strength, right? But there's a catch. It's not always that way, right? Because it depends which party is in control of open interest, right? It depends. And a very great example of that is euro dollar, right? We're gonna switch to the charts now. So let me see. Yeah, you can see the charts now, right? Most likely. Perfect. So this whole move down, right, on euro dollar. Yes, they have been buying, right? This is the commercials, by the way, on the COT report. They have been buying. But the open interest was not behind this move, right? Or, well, it was behind this move, but it was not in the hands of the commercials because it was large traders that were funding this, right? It's Wall Street, just to put a name on it, right? It's Wall Street that's behind it. It's not the commercials, right? So if the commercials are not behind the move of driving it downwards, right, it means that large fund traders are most likely big time short on this, right? But what did we learn in a few slides back? Which party has the most amount of access to capital markets? Who has the most money in this game? Who has the deepest pockets? Yeah, central bank commercials indeed. They have the deepest pockets. So in the game of holding until you have no money, who's gonna win? Commercials will win at all times, right? Because they have the most amount of money. So they can also enter the most amount of drawdown. They can handle the most, right? So what's happening, right? When the euro is going down and going down and going down, and non-commercials are opening short after short after short, right? And what happens if the commercials say, you know what, we're gonna step in, we're gonna buy now? What will happen? Full port, smart money reversals. Yeah, but there's a term for it. There's a term for what will happen if commercials or central banks or whoever, which party, will step in and start buying like crazy, right? When the other side is like heavily short on this move. What will they do? Hedging? No, not hedging. There's a specific word I'm looking for, and I think you guys know it. Ooh, Basta is close, yeah. Not manual intervention, not what I'm looking for. Basta is very close. There's one additional word that we need to add to it, and it's perfect. A short squeeze, yeah. It's a short squeeze, right? They will push up the market, and while all these people are like crazily over leveraged short, the market goes up and they're squeezed out. So it's a short squeeze indeed. So most likely, something that I'm looking at right now is this, right? We see the markets going lower, right? Eurodollar is going lower, discount prices. While at the same time, the COT is going higher, right? They're buying, they're buying, they're buying. And if we zoom out a little, what have they been? They've been heavily net short, right? For the past 2 years, they've been heavily short on USD, right? Or sellers, right? But for the first time in since 2022, they have been net long on the euro, right? They're buying a lot on euro, right? So they're in buy positions. While at the same time, the dollar, they're just look at this, they're selling it like crazy. Does it now mean directly that euro will go to buy side liquidity? No, right? That's not how it works. Could we expect a reversal to come in right now? That's what I'm looking at, right? That's what we're gonna monitor because what we do is we spot a situation, we see a scenario happening, right? And then all we're gonna do is follow is that same scenario still in place. We're gonna follow the data. Is it still telling us the same story? Yes or no? Right? That's how we're gonna anticipate these long-term trends to unfold, right? We can't say on the 13th of January with the big divergence, okay, it's gonna be longs only for the next 2 years, right? It's not exactly how it works with just this info. Um, at the end of the day, fundamental data needs to support it, right? Quarterly shift can take place. Yeah, that's how you could internalize it with ICT concepts for sure. Um, it also depends if the euro isn't that strong, because what happens if like all like future data for the euro comes out to be very weak, right? And they say, yeah, we're gonna rate cut like crazy. Um, production is down, unemployment is up, all bad stuff happening, right? Yeah, most likely the euro will not decline as much, but it will also not rise as much, right? Because there's no fundamental backing as to why the euro um, would provide a very good return on interest, right? So most likely they will go sideways or something like that, right? It's still going, nothing playing on my end. Yeah, we're still going. Uh, if someone's here, maybe check if Mike can reconnect or something if he can't hear me. We're good? Perfect, we're good. So, yeah, okay, perfect. So this is the first thing I wanted to look at, right? Yeah, exactly, Londres. Say, I think we're looking at the same probably, right? Yeah, perfect, perfect. We're in line, man. We're in sync. Good to hear. Same thing that we're looking at. Uh, then euro dollar, same situation. COT index, right? What can we see right here? Below the 20 mark, above the 80 mark, right? So extreme levels of selling, extreme levels of buying, right? Extreme levels of selling where? Right? On the commercials, they've been selling the most up here. Why up there? Deep premium, right? Deep premium pricing. Deep premium pricing where? Deep premium pricing above a buy side liquidity pool, right? Look at when it starts, right? We hit the liquidity pool, and that's when the intense amount of selling starts, right? They start sending it down in terms of selling, right? They accumulate a lot of sell positions, right? Up until here, and that's when they start offloading them to the other side of the market, right? And in here, what do we see? In sell side liquidity pools, they start accumulating long positions, right? So crazy amount of long positions that have been built up, right? So there's another thing that Larry William teaches, and that's that most of the time the commercials will not stay above or below the 80 and 20 mark for a long time, right? Usually it will gravitate back into between 20 and 80 quite quickly, right? And also the reports lag behind a little bit. Is it specifically 3 weeks? Something like that, right? Like RSI, yeah, but RSI is like based on price development, right? And this is just a oscillator based on actual positions of the market, right? Non-commercials cannot stay in control over 3 weeks. Not necessarily, I think. They can stay in control for a bit longer, but doesn't end up well for them often. Yeah, it's recorded. I just checked because sometimes I'm paranoid that I'm not recording it, but I'm still recording it, luckily. So, all right, let's see. We're gonna look at the Nasdaq as well. Right? Yeah, there we go. Here we can see it on the Nasdaq as well, right? Uh, Overall downtrend selling, right, on the Nasdaq. Which God index indicator am I using? Uh, Not sure which one it is. Oh wait, source code. I don't need that. I need about the script. It's this one that I use for the index, right? For the normal COT, it's of course 2 degrees indicator, and for the index, it's this one. And then I just disable everything because I don't need anything else than this. I just click on show commercials, style only commercial 3-year index. That's it. You can put it to others, right? Retail 3-year index, and then we'll show retails, and then we'll see an invert chart happening. Why is it not working? Okay, well, I don't know. Just keep it like that, and you'll be fine. So, as a few of you asked, it was because line was wide. Oh, okay, okay. Well, that explains it. Good catch. Let's see. Style. Ah, yeah, you're completely right. Let's put it to orange, and we'll delete this. Right? We can see the exact opposite happening. Right? So stacked cumulative longs up here. So a lot of retail traders that have entered the market a bit too late, they are way too late, and they caught the reversal, or caught them. Let's put it like that. And now they're selling like crazy, even though we're going up, right? So that's why we say fade the non-reportables, fade them always, because especially at market tops and bottoms, they're incorrect, right? Yeah, for sure. In the trend, they're quite good, right? If you manage to enter in the beginning of a trend, you're fine. But yeah, if you think the trend's going to continue, you're not fine. So we can apply the same stuff on Nasdaq, right? It's completely applicable to all indices as well. And what can we see? Overall selling, right? Overall selling pressure, right? Or not pressure. Overall selling on long-term positions, right? But in the meantime, we can see that overall the market goes up a bit. Overall, it goes up a bit, right? And when is it going up? So what we can see is that the market's moving higher, right? Well, they're selling, right? So they're kind of selling into higher prices. What can we see here? The market's going down and they start to buy, right? How can we interpret that as ICT traders? What do we need to do in order to get something useful out of this? Just wait for liquidity pools and alignment. Exactly. It's that simple, right? We look for the market maker model framework, we look for high time frame PD rates to enter the game, and we're fine, right? So in this case, what do we see? Wait for the month to close. We have a weekly fair value gap in here. Let's color it blue. A nice color. Go back to the daily. Give me 1 sec, guys. Someone at the door. One moment. Man in black knocking. Yeah, for sure. No, I'll make sure to cut it out at the recording. Uh, so we can couple it with a PD array, right? Weekly PD array with the hedging program, understanding that they're hedging, and then most likely what we'll see is that they start turning it around, right? So liquidity pools, market maker models, higher time frame PD arrays. That's all we need to understand what the market's actually doing. What else do we have? Big opening gap right there, right? Let's make it orange. Looks important, right? It's only delivered on one side of the market, right? Only down close candles. So what can we expect? Up close candles coming towards it, right? Exactly. That's how you can make it very specific, right? Adding the daily profiles, adding the weekly profiles, adding what can I say, the economic calendar, and by then you have all a complete set framework that'll guide you to where you need to go, right? Perfect. When do we receive the weekly layout? That's coming Wednesday. We're gonna release that. Yeah, it's a nice template that I made using the higher time frame power of three, the news indicator, and OHLC by FX for Living. It's basically a template that allow you to plot the whole weekly profile and everything around it completely automatically, right? Because personally, I don't like to waste time. I have a lot to do, so I want to spend a lot of time um, to mark out the charts in complete detail all the time, right? So luckily we have the guys at 2 degrees that'll automate a lot of stuff for us, and you know that's the beauty of it. We don't have to use one indicator and stick with it. We can combine them and make beautiful templates that'll allow us to um, automate everything basically, right? So yeah, I'm gonna release this for free. Keep an eye out for that on Wednesday. Gonna put it in the public free WOP. We're gonna put it in there so people can download the document properly. Are there any questions, by the way? Let me know. Oh, there's one thing I want to add though about open interest. We can use open interest in consolidating markets as well. So what we can do when we have a consolidation, right? So the market's going sideways, but open interest is rising, right? So market going sideways while open interest is going sideways. What does it tell us, right? Market's going sideways, open interest is going up, right? It means there's more interest in the market. If we check the COT report and it tells us that the commercials are actually the ones opening more long contracts, right? Indeed, it's accumulation, and that's a divergence between the chart and between the COT that tells us that they're actually accumulating at some point when they are going sideways, right? Same thing at the other way. If we have a with a rise in open interest, it's bearish. How to determine bullish? We don't use the open interest to determine a bullish or bearish week, right? It's just a tool that we use in combination with other tools to shape up a longer term view on the market, right? So um, open interest alone is not enough to work out a complete bias, right? We need more. Exactly. Don't try to anticipate it beforehand. Easiest thing you can do is just wait for Monday to play out so you have an idea of what the rest of the week can do. You lay out your economic calendar to the side and you can see which days most likely uh, will provide an expansion, right? Due to the volatility injection. And that'll make your life a whole lot easier. Red folder tweet earlier, that's a new one. We're about to have a lot of red folder tweets nowadays. So thank you for being here, guys, and paying attention to the presentation and all. Let me know if you have some questions. I know that Shafiq told me to look at GBP USD, right? It was. He told me. For now, we are bullish on NQ because there's no reason for not to be. We're no reason to be bearish on NQ, right? There's no reason yet. Well, that's like perfect, right? It's like perfect. Based on only the COT report, yeah, I believe that immediately. Yeah, I already have it on my second monitor. Forex majors, and then we need the Great Britain pound. So for currencies, those COT reports are based on the currency futures, by the way. Hello, hey man, Ollie, how are you? Yeah, so they opened about 15,000 extra longs in the week of 14th of January. So on this day, the 14th, they added 14,000 extra longs contracts. Right, so at the 14th, you got a signal that says, hey, commercials opened 14,000 extra long positions today. And you know what they did with the shorts? They closed 4.7k shorts. Right, so I told you, and they're building or they're closing short positions for the last 3 weeks. I'll put up a picture. Put up a picture on the chart, right? So what this tells us is the actual positions, right? So they've been opening longs, closing a bit of longs, opening more longs, and opening a large amount of longs, right? At the same times, um they closed out or they open a little bit of shorts, they close shorts, they close shorts, they close shorts, right? So what does it tell you? Like a skill, it's completely going to the other side of uh, the skill, right? So here you got your signal that it's time to go long on GBP. That's a nice example. So yeah, this is basically what I do on the weekly intermarket, right? Uh, um, so I see some people in here that are also subscribed. Basically, I release like a full report, 22 pages about all this kind of fun stuff and how to apply it. That's nice. That's nice. I can confirm, Londres, that the stuff he talks about the Monday, it's good stuff. So definitely check it out. I saw the data. Did someone say data? Ollie comes in. Can be a decent conference, but it's kind of after the fact data. Do you trade open interest in real time? Well, I don't just trade based on open interest, right? You check the open interest over time and you check what's happening on the COT reports, right? Because if I have a conclusion that I see, okay, maybe commercials are building up a lot of longs, right? Or maybe open interest is going higher. I want to see what's happening actually, right? To see if the open interest is supporting what I'm seeing, right? It's a support tool in that sense. We don't use it separately. Um, we need to have a it's we use it alongside other stuff at the same time to further confirm our thesis, right? That's how we use it. Yeah, Confluence, but it doesn't really matter that it's limited or if it's behind a little bit, because the COT is also a bit behind, right? That's just how it is. But at the end of the day, we use the COT and the open interest for longer term trends. We don't really use it for um, like what's happening tomorrow. But yes, there's a framework that we can use to go from daily chart or weekly chart with the COT all the way to 15-minute or a intraday execution for sure. Because that's basically what I do. I go from the COT all the way into intraday executions. It works for me. And then I said we're gonna show a little preview of the document for the weekly profiles, right? That's something we are gonna show. Let me grab something. Right, I'll drop it in the chat for you guys. Oh, I see the one is double now. You can ignore the latest or the last automation setup guide and template. Hello, Jake. How are you doing, man? How are you doing? Well, good to see you here, man. Good to see you here. That's a nice approach, Londres. Yeah, it's a bit more work to dive into these reports, into the COT and whatnot, but it does provide a clear edge. And it's not something that's it's how can I say it's reputable, right? It's the actual positions that institutions and whatnot are taking on. So there's no way of twisting that. There's no way of denying it. It's just the actual reality of what's happening behind the scenes on a large scale, right? So there's no way we can um, you know say something different about it. That's why I like it. A lot of people have a lot of different opinions on, intraday concepts or whatnot. If they subscribe to specific concepts within ICT methodologies, but this is something that's, there's nothing to that we cannot agree on, because it's all the same perspective because it's just the reality of what's happening. So yeah, thank you, Josh. Appreciate it, man. Yeah, if people want to learn more about this, just let me know, or join the free WAP. And yeah, I release reports about this every single week, educational and informational, to get best of both worlds. Because I do get it, because some people just don't want to dive into this stuff. So if people are, where's the link to WAP? Uh, can I send it in here, Josh? Of course. Okay. I'll send a link if you got 1 second. Yeah, but if you want to subscribe, make sure to use the code 2degrees. Make sure to use it, because you're all here through 2degrees. So make sure to use the code 2degrees. Shapiro runs a $200 million fund based off the COT. Well, that's crazy, man. I know Larry Williams made his 11.6K percentage win based on the COT and seasonal. So that tells you enough, I think. Not a discount. Williams is his guy. Yeah, doesn't surprise me. The man is crazy on everything COT related. I'm goated. You are goated, man. You're all goated. Everyone in here is. I do wonder if people made some notes about this. I think Josh is really into that, right? Giving XP for that. You need to go into WOP, man, athlete. If you go to WOP, you can click on the Discord for Elite, and you'll be able to claim it. Otherwise, I'll help you later. You can claim it there. A, B, C, is that coming next? For sure. A review of 2degrees? For sure, write a review about them. Of course, do it. Thank you, Man9. Appreciate it. I'll force him to write a review. It's okay. I'm gonna cut the recording, by the way, because um, yeah, we're done with the presentation for now. There we go. And I'm gonna make sure to upload it. Cut out the little short break of 30 seconds that we had, and I'll make sure to upload it on YouTube, and then it'll get posted in here for the people that weren't able to attend or weren't able to take notes, but still do want to take notes. Appreciate it, man. Yeah. Let's also, by the way, because a lot of people are here, a lot of people have been really I like the interaction in the chat. Let's give two people access to the premium reports for a couple of months. I think that is something nice to do to give back to you guys, right? I think that's something Josh can set up with the whole giveaway command. Oh, there it is. There it is. You gotta click the party thing, the party icon. Yeah, for sure. If you want to learn more about COTs, just check out Larry Williams, to be honest. Just check out his books. That's where I learned the most about COT. yeah, definitely recommend checking out his stuff. Definitely. So let's see who wins. The winners, there's only 29 people who entered the giveaway, but there's 66 people in here, so make sure to answer. Very good odds at this point. Where the giveaway link? It's I tagged it. It's a little bit up. Stay safe, man, Jake. Hope you have a great night. Hey, let's see. I see a few people got 100 XP for that. That's great. For the report, there's still a minute left for the report. I agree, man, Laundress. I agree. But it's also because a lot of people come in here to stream, right? So, and when a lot of people attend, let's say, 2 or 3 streams a week, you're gonna learn a lot of stuff in a very short time. So 20 seconds left for the giveaway for the premium reports. Just make sure to send me a DM if you have won, and then we'll get you sorted with a special code so you can enter for free. Well, glad to hear that, man. Glad to hear that. Alexander S and Alex, congratulations. We'll just send me a DM and we'll figure it out. Yeah, two Alex is one. Simulation never failing. Yeah, that's right. That's right. Congratulations, guys. And then just send me a DM and I will help you out. Let's see. Indeed. Thank you, everyone. Thank you for being here. And that's it for me for today. Probably we'll do another stream somewhere soon. Maybe next time, you guys can pick a conversation or a topic for me. I'll be more than happy to. And otherwise, I'll think of something. So if you ever have ideas for me to stream about, just tag me and be like, hey, I want you to talk about this, and you know, we'll figure it out. Thank you guys for being here, and then I wish you a very nice, a very nice night and evening or afternoon still for you guys probably. Yeah, for everyone in U.S. time zone, still afternoon. For me, it's already 9 p.m. Gotta head to bed. Oh, just kidding. Have a great day, bye everybody. Bye bye.